and it has been a roller coaster ride. You may give your employees, you have to make sure that their payment is done, irrespective you have a single penny at your account.
Three out of 10 gets rejected because of poor credit score.
This comes into picture when one business, so business in one country is transacting with business in another country without having a local entity in that country.
Break it down into annual plans, and the plan has to be very specific.
Real estate still require a local.
It has a very huge cost.
And beyond this,
it is our responsibility.
Welcome to Beyond the Idea, where we go beyond inspiration and dive deep into the real challenges of building a business. I'm Muskan Munjal, a chartered accountant and business consultant. Joining us today is Sayan, the founder of Red Switch, a business intelligence and digital solution provider from India, servicing across the globe with the focus on GCC market particularly. Sayan's business journey has been one of perseverance. He has navigated the challenges of building a business from India while managing cross-border operations, essentially without any capital. Sayan, welcome to Beyond the Idea. Let's start with your journey. What inspired you to start Red Switch, and how did you take that first step into entrepreneurship?
Before I answer your question, Muskan, a heartful thanks to you for this opportunity and sharing my experience to you, the audience. Now, coming back to your question, I was having a very good life with a stable job, with a regular monthly income, and working one of the most reputed organizations as well. I'm not taking the name though here, but something else was destined for me, and I jumped into this entrepreneurship in a accidental manner.
Wonderful.
So after working more than 10 years in a decade and having a multinational cross-border experience as well, having marketing domains. So while I was working with this organization, with due respect to all, there was some internal issues with the organization, and that impacted my mental health. I have to take the support of the doctor, and I left this organization without any job offer at my hand. And I have my family to take care of that. I have my home loans, I have my car loans, everything to respond. But I took a leap of faith rather. Sorry. In that case, I was not aware that I will be doing any entrepreneurship. I was still searching for jobs.
Okay.
After that, I was searching my job. At the same time, last year only, I started doing freelancing also. So the agenda was to keep myself in practice in the digital domain so that I don't forget it. Because if you don't practice anything, obviously it will evolve and you will forget. You will lag behind. So I was casually doing freelancing as well. But later on, while doing, I saw, what should I say, ample opportunities in this domain, that is in business intelligence and digital solutions, that I thought now it's high time for me to form a company as well now. And I made it in my mind that I am not going back for any job anymore now. So after that, starting this way, actually my journey is initiated, and now on, I must say around it is almost more than 8 years or so. My journey has initiated, and it has been a roller coaster ride. Being an entrepreneurship, every day you may give your employees, or if you are working with any part-time employee, freelancers work with, you have to make sure that their payment is done, irrespective you have a single penny at your account. That is the way, but it also gives a lot of freedom to you. You have the liberty to take care of the family side by side. You can delegate your work to someone else and carry on your work, personal work. So this is how my journey initiated, though accidental, but I'm enjoying it. At the same time, learning a lot.
That's so true. I mean, one, you took decision for your mental health. But I mean, how entrepreneurship, how difficult it is. So one obstacle that you mentioned that you faced was, even when you do not have a penny, you have to give it to the freelancers or the team that you've
Definitely.
outsourced them to.
Yeah.
So other than that, has there been any obstacle that you would like to mention?
Definitely. When we were working, now suppose uh, I was working for more than a decade.
Hmm.
Now I was working in the marketing domain. Maybe it's business development, be it marketing communication, be it any other domains in the marketing, be it business development directly or directly in sales. You have to take care only of the marketing domain itself. But
Hmm.
now, when you are running a company, or even when you are freelancing, you have to take care of everything, be it operations, be it HR, be it, of course, sales is already there. And I must say, I don't include that to be a headache for me because I have the previous 10 years of experience, but I don't have other experiences in this domain.
Hmm.
So it
That's
is a learning phase for me. And I'm still say, even if when this organization will be established in the near future, it is still a learning phase. And I can say that whoever the entrepreneurs across the globe now, they also have crossed this stage. Once upon a time, maybe some have may have a family business and they have seen and gone, but they have specialized in a particular, done their MBA or done their engineering and specialized job in a
hmm.
specialized sector. After
Hmm.
that, when they jumped into the, they have also felt these doldrums actually.
Hmm. That's
I am
so.
also feeling that, no doubt on that. But
Hmm.
as I said in the previous question, I am enjoying it and learning as well.
Well, now that you've said it, that apart from sales, and you have a lot of other things in entrepreneurship, be it finance, be it management, be it operations. So here we are to help you and founders like you to take up the questions that experts can answer and give you clarity on. So, Sian, let's get into the challenges that you're facing right now and that you like to get clarity on. So you may go ahead with the questions that you want to take up.
Yeah. So, Muskan, as you are very much aware, we are working together for quite some time now. And as I have mentioned also in this, your first question, referring to your first question and my situation also presently, you know that I defaulted against one of my home and car loans payment
Hmm.
last year. You're aware of that. So,
Yes.
that resulted in poor civil score. And, you know, I want to know from you and learn from you, how can I prevent such situation so that it doesn't, impact my civil score again. And maybe in the near future I can apply for home loans or any other grants, even for where civil score is a, first and topmost criteria for any banks.
Hmm. That's so true.
So you can guide us, guide, me like any other entrepreneurs who
Hmm.
is seeing this, please.
Perfect. So, Sian, the first question that we're catering is, how do you not default on your payments, EMIs, and to ensure that this cash crunch does not fall up again? So, the major reason is a poor cash flow management. And it is not just for your business, it is for yourself too. So, being a single owner, I would suggest that, and the only one who is taking care of Red Switch, and I believe this is the only source of income that you have. So, it is
Right.
very, very important to have a fixed sum of money uh, that that you need to run your home. So, say if there's a fixed cost that amounts to your EMI, your rentals, your house, and personal expenses, that's one cost that you need to make sure that you are withdrawing from your business. So, just keep an idea and a written track of what your fixed income for fixed expenses are. Personal fixed expenses that covers all your house expenses, okay, given EMI and everything. So that would be one, your personal expense planning. The second bit is cash flow management for your business. So here, so what cash flow management for your business is? It is inflows and outflows of cash. What you get as receipt from your business, from your sale, and what are the outflows is the expenses that you do out of business. So, you have to ensure that the cash flow is positive. Matlab, cash flow positive is that you always have your income above your expenses. So the income is this much, your expenses has to be something less than the income, so that you can cover your personal expenditure and the expenditure of the business. And there are moments where the cash flow is not always positive. Say for example, we were discussing that you need to take a trip to GCC and the regions to get
Right.
clientele. So that might shoot up your expenditure for a month, which might result in a negative cash flow. So there might be months where you will have negative cash flow, but all you have to try is to turn that into positive cash flow as soon as possible. So that's one. The second thing is you need to calculate a break even for your business. Break even in this, I would also request you to include your personal expenses. Say I would take, if you need 40,000 bare minimum to earn your living, like as in to do all sort of your personal expenses, 40,000 plus the expenses that the business needs. That would be your total expenditure. That so It's not that I'm not distributing. Your personal expenditure are different, but since we need to ensure that we take it out from your business, you draw that from your business, we will also calculate that as your salary or your income.
Right.
So, it is important to know your break even. Break even is where you average your monthly expenditure and monthly income and calculate an average time that you will take to come beyond a break even point. So you need to know that at this break even point, you're earning nothing. And beyond this, you need to increase your sales so that you come into profit eventually. So
Right.
that's the third thing. Then there is a very good productivity hack, I would say. We've also made a video on productivity and success hacks for business in 2025. I'll just share the link for you and for the
Definitely.
audience. Uh, so, one of the first productivity hack which we've mentioned is a vision growth traction. So, where we tell you to make, say, at least a 3 year plan, a long term plan for at least 3 year, break it down into annual plans, and the plan has to be very specific and measurable. So, say you have a year plan now. After 3 year plan, you break down it into this year's plan. Then you further break it down into quarterly plans. So you know that if you need to have a sale of a CR this year, you will break it down into 4 quarters and say you need to have a 25 lakh sale this quarter. You will have to ensure that to make this sale of 25 lakh, you have to have this much of expenditure. That's mandate. I mean, it will include your traveling to GCC region, your expenditure on marketing, your expenditure on the staff, the office, the bandwidth, be it internet bandwidth, as detailed as you can think of the expenditure. So that would be the planning of it. So you've already, with this vision growth action, you've already forecasted your sale and forecasted your expenses. So now is the time for the fifth one, wherein we calculate the variance analysis, wherein you simultaneously jot down the actual expenditure and the actual income and calculate the variance every month, so that you know that if in the first month of the quarter you are not able to generate the required amount of revenue that you planned to, or the expenditure has increased, you need to know how to reduce it or increase the sales. So that will give you a good track of how to manage your business. And a few very, very small things that I would like to suggest you is to maintain two separate accounts, one for your business current account and one for your personal account, and try to keep your at least the EMIs that you cannot default on in the personal account as early as possible. Maybe try to keep that from the receipt separately, so that maybe a week before your due date, or 2 weeks before your due date, so that you know that, and you're stress free about your EMI for future date. Because I for sure know that we'll have to apply for the loans for your
Right.
business loan later on. So we need to ensure that your EMIs are on time, because it takes approximately good time to get back to those civil score. And I'll also discuss it approximately. So They take into account 36 months of your credit score, 36 months of your credit payments, and your credit history, to take into account the credit score that they calculate.
Right.
So that was one. The other thing is a small suggestion of emergency fund that I would like you to, if you can manage, even as small as 1% on your sale. So if you have a sale of say $100 per month,
Mhm.
or whatever, 10,000 rupees or 20,000 rupees, as small as 1%, keep it for emergency fund in your current account, so that any emergency fund for your business can be taken care. You don't need
Right.
to uh, look for external sources on any emergency requirement in your business. So precisely, that is what manages your cash flows and your business efficiently. You'll be able to track all of them.
Definitely, definitely, Muskan. Because as you have mentioned in the last point, there's rainy days are bound to come. Maybe today or maybe tomorrow. We have to make ourselves prepared. At least we are capable enough to pay off whatever. Forget our things first.
Hmm.
Whatever responsibilities people are working with us,
Hmm.
be it leader, be it your employee, whoever they are, it is our responsibility to pay them off first.
Absolutely.
So those 1% or 2%, whatever we can, we have to
Hmm.
save. That is a criteria. Now, another question I would like to ask, Muskan. You explained it well,
Hmm.
uh, and the thing is, there are so many tools around. You know,
Hmm.
there are so many advertisements regarding project management tools, say financial management tools, XYZ tools. No,
Hmm.
can you suggest some of the tools which can be, financial tools, specifically financial systems or financial tools for,
Hmm.
tracking the cash flow, expenses, and payments?
Hmm.
Specifically, since I have no relation with any manufacturing because it is completely service. So,
Hmm.
specifically oriented to our business, if you can
Hmm.
suggest some of the tools, financial specifically.
Perfect. Sayan, so I have a handy template that we send forward to the owners, the founders that are at the initial stage of their business. I will also just share my screen and show it to you for a moment. So, see, what I talked about here is the company's vision and values that
Right.
I would like you to add on. Then you can mention 10-year goal, a 3-year goal. You can break it down into annual goals. Then this, say, first year gets broken up into the quarterly breaks. And here I request you to, so this is basically to add your estimated revenue,
Right.
export and domestic sales, your estimated expenses. So, since you are a service based industry, you would not have a cost of goods sold here. You can remove
Right.
this from the template. You would have operating expenses. We've divided operating into fixed, variable expenses. You can also add these expenses here accordingly, according to
Okay.
your estimates. So say if you do not have any subscription but you have a cloud server to take up to, that adds to your fixed expense, you can add it here or in the variable, however it is. Then we have marketing expenses. In fact, we have capital expenditure. You can remove machinery, furniture from here, but you would have some computers, softwares, patents, or any other certifications or any other intangible or tangible capital expenditure that you need for your business. So
Mhm.
this automatically calculates your net cash flow. And then this is where you can write your actual. So the dashboard will compare your estimated with actual and give you a variance analysis and tell you that you are at this much variance from what you expected. So you can give all these quarterly mentions. So you can use all these quarterly reports. The
Okay.
dashboard will give you an exact KPI which you need to take care of. It will give you a variance analysis so that you can track majorly or at least the first year of this expected uh, the annual goal that you've made.
Hmm.
Fine. So one, you can use this. Apart from this, if at all you're willing to spend some, maybe as low as 500 or 600 bucks per month, Odo is extremely helpful software. It not only gives you accounting, it has amazing accounting feature with amazing dashboards. You don't even have to manually draw a purchase or do an entry. You can just simply take a picture of the invoice and it gets uploaded as a purchase or as an expense. So that's also very easy, and it's not that expensive, like 580 per month or something.
Okay.
Then, apart from accounting software, it gives you all CRM, customer relationship management. It gives you edge over team management, team meeting. It gives you a separate area for messaging, a separate area to manage your project. So even if you are wanting to delegate a particular task to any of your outsourcing agent or any of your salaried employee, it just automatically, you just have to enter their name and email ID, and it automatically transfers that request to complete this particular task and gives them a deadline. In fact, gives them a deadline to complete it at this time. So amazing softwares, amazing integration of a lot of different things, even if it is emailing, CRM, meetings, calendars, a lot of other things, along with accounting. So eases business to a great, great extent. Like I have been suggesting either Odo or Zoho to my other clients, so you can use it. And just in case you need any details on handling of the software, there are free training modules available in the Odo itself. However, still, if you feel anything, I am there to help, and you can anytime.
Definitely, definitely, Muskan. Because doing something, I understand the Excel sheet is also good, but
Hmm,
as I said, we have lot of work to be done. Let's accept the fact. Being an entrepreneur, you yourself being an entrepreneur, you are though you are a CA, you need not to only take care of the finance. I believe there are so many work to be done.
that's so true.
So that is the thing. So
Hmm.
it's that Odo software may be very much useful because it will, the more we save time, the better it is. If we can upload that invoice, it will be done, and it is the almost around 600, I believe, monthly, right?
580 monthly, yes.
That's enough. That's
Hmm.
enough.
Hmm.
That's enough, I think.
Gives you
So
a good storage also, storage capacity, and a lot of other things. Like you would love the system that they've built. It's actually really nice. I'll share the link also.
okay,
uh,
okay.
so yeah, perfect. So is there any other question that you'd like me to take up?
Yeah. The last question I can ask is, how can I finally improve this credit score?
Wonderful. So Sian, out of 10 application that goes for loan, three out of 10 gets rejected because of poor credit score, technically.
Yeah.
And there are, I believe, in India, four agencies, rating credit
Mhm.
rating agencies, but none of the calculation methodology is clear. So it is not in public that what method to use to calculate their credit score, the credit score of any person. However, there have been certain reports that we've been following too, which mentions that they have started looking for 36 months of credit history. Initially, it was 24 months. Now, 36 months of your credit history is recorded to take a credit score, to give you a credit score. And even if you have a credit history of less than 6 months, they make a credit score for you. So even if you have a less than 6 months, as in 6 महीने ही हुए हैं से आपको लोन लिए हुए, even as small as that time span uh, is taken care to record your to get your credit score. So that 36 months period is very crucial to note, because that is the time it takes to even strengthen your credit score, so if you default. And one of the most important factor in the process is payment history. It adds
Right.
up approximately 300 points if there are no delays. So for the fact that out of 900 credit score, they look for 750. That's their that's good as per them. However, 700 is also a good credit score to look up to. And imagine 300 in itself just gets added because of clear payment.
Right.
So that's one. And for every 30-day delay, in payment, 30 point gets reduced.
Okay.
Once your late payment is remarked, it takes
Hmm.
24 months to sort of settle it down, to get back to the original score. It's that bad. So, it is so important to do that financial management. Uh, Even if it is your business loan or personal loan, everything gets accounted. So that's one thing that you need to take care of. Uh, so since we have already delayed it, the EMI's payment a bit, the other thing is that what we suggest is, if you've not taken any credit in another 6 months, the existing payments and their rotation gets accounted for. So
Right.
if you try and make the payment of a credit card 6 days before the due date, it
Mm-hmm.
reflects that it ups your score a little bit. So, we have at times also suggested clients that they suggested them to take a credit card of, uh, say, even a lakh, so that and ensure that you only take 40% of your credit limit. So, if you take a credit card for a lakh limit, you
Mm-hmm.
just uh, withdraw less than 40,000 or less than 40,000 from that credit card, and 7 days before the due date you need to do the repayment. So it shows the bank that you have sort of the amount available, the bandwidth available, and still you're not using it. So it sort of rotates that circle in a speedy way and does a little good in improving that score.
Yeah.
uh,
This little good maybe adding will help us to, somehow improve my credit score at the earliest possible.
and
Yeah.
that's the only way we can plan it.
Definitely.
So yeah. uh,
Definitely. Thanks a lot for this, clarifying my doubts, and request, to have your next questions, please.
So, Sian, this is the time to dive deeper into your questions related to GCC market and to provide real solutions. I would like to invite and introduce our guest expert, CA Siddhart Gupta. He's one of the founder of FinTeacher that specializes in serving GCC businesses with compliances, market entry, and cross-border operations. Today, he is here to guide us through these complexities and answer your key questions. Welcome, Siddharth sir. Thank you for being here.
Hi Muskan and hi Sayan. And Muskan, first of all, thank you for the introduction and thank you for having me on this podcast. And I must say that you're doing a wonderful job for the businesses and the community at large by creating a platform for discussing ideas and providing important insights. And I'm really excited to be here today.
Thank you so much, Siddharth sir. It is a pleasure having you, and so excited to look forward to the questions and how we take it up. So, Siddharth sir, before we ask Sayan to take up the questions, I would just request you to share your experience working with businesses operating in GCC region. How Just a bit of your experiences there.
Sure. So, Muskan, I've had the opportunity to work with a diverse range of businesses across the GCC, right from startups in their early stages to large multinational corporations. And I'm glad that at Pitfalls, I could help them navigate the regulatory landscape and structuring their market entry. Now, see, each business comes with own unique set of challenges and opportunities, depending on its size, industry, and specific GCC country that they are targeting. Now, say for example, a fintech startup in Dubai will face very different set of challenges compared to an established Indian manufacturing company looking to set up presence in Saudi Arabia. Now, what remains common is the need for strategic planning, having regulatory clarity, and the right market approach to ensure long-term success.
Absolutely, that's so true, and thank you for sharing your experiences, sir. I would now just request Sayan to, because of a little paucity of time, we would just ask him to take up the questions.
Sure.
Sayan, please go
Thanks, Muskan. And sir, uh, from my side, welcome here,
Thank you.
and helping businesses like us. So, sir, as Muskan have said, sir, I am focusing, though I'm based in India, but focusing more towards selling my services to the
Mhm,
GCC region
mhm,
with a specific, if I go deep also into the GCC region, specifically, I am mainly having, or rather, I should say, put in this way, that I am getting more clients from Saudi as of region, Saudi
Okay.
Arabia.
Okay.
So, these are the things that as of now, my first question to you is,
Mhm,
that if you as a whole, I'm not talking specifically about Saudi, as a
mhm,
whole, in
mhm.
the GCC market, what are the key considerations if we do some, irrespective, wherever we are based, be it in India or be in there, what are the key consideration while doing business there?
So, see, GCC region as a market is a very interesting region and has immense potential for businesses. And what is important is careful planning. Now, based on my experience working with businesses who are wanting to enter the region, not only Saudi but the entire region as a whole, I think there are four uh, key considerations that one has to consider. Now, these four considerations are definitely the regulatory framework, the nature of business that somebody is in, cultural consideration, and tax planning. Now, coming to the first consideration, which is the regulatory framework. Now, each GCC country, so there are six GCC countries, and each GCC countries has distinct regulations. And choosing the right country for setting up the business depends on the kind of industry that business operates in, and the compliance requirements that are attracted to this business, because every business has different kind of regulatory challenges in the region. And then there are various kind of entities that can be selected. For example, UAE has a concept of free zone entities that allow 100% foreign ownership, and this is also the most preferred choice for many people. On the other hand, Saudi has opened up many sectors that can have for 100% foreign ownership. A client that I had worked with, which is into logistics. So these guys initially planned to set up their business in Saudi Arabia, but later they choose UAE only because they wanted full ownership of the entity with minimum regulatory hurdles. So again, depending on the nature of business and the market or the country that they are targeting, it's very different. So first is regulatory framework that has to be considered. Second is the nature of business. Now, different sectors have different growth trajectory, especially in the GCC region. Now, for example, Saudi Arabia. The Saudis are investing heavily on renewable energy, tourism, whereas UAE is a hub for businesses like fintech, logistics, and e-commerce. So, someone wanting to build a business around these core sectors, that is, say, energy, infra, e-commerce, logistics, fintech, should definitely look at GCC. Great opportunity there, and other ancillary businesses such as say digital marketing, technology, education, facilities management, consulting, HR, legal, are the kind of services that will flourish in the region, to my mind. The third consideration, and I think this is the most neglected area, is the cultural consideration. So businesses in the GCC region are highly relationship driven. So unlike the Western market where deals uh, uh, are very transactional, and if you have the capability you will land the client. But here it is built on trust, it is built on deep connections. So for somebody it is very difficult to convert a lead just by exploring opportunities on LinkedIn or social media platforms. Of course that is important, but it requires much more than that. I'll give you an example. A client of mine, so they are into IT consulting, and they are based out of Bangalore. So initially they struggled in Saudi Arabia because they were too transactional in their dealings. So only after engaging in face-to-face meetings, they could secure their first major client. And in fact, the same thing happened with us as well. It took us about 4 whole months to land a large Saudi-based client, and same thing with UAE. So, my advice for somebody who is exploring that region would be that landing or converting a lead in the region is quite time consuming, but somebody has to be patient. And the fourth and the most important consideration is tax planning. Now, traditionally, GCC region did not have taxes, but now taxes are being introduced in various countries in the GCC. UAE has recently introduced 9% corporate tax. Saudi Arabia has 20% corporate tax. Saudi Arabia also has 15% VAT. So businesses must also plan their tax structures efficiently to optimize the tax cost.
So, sir, as you have said, while saying about the relationship building and all, I myself is actually feeling the heat actually where he's sitting right.
Right.
I I am getting business, but it is time consuming.
Yes, it is definitely.
And my business is mainly since it is B2B, so I focus more on LinkedIn. So
Ah,
that's why the first, though, I had a discussion with Muskan also on this. That my first interest is to visit Saudi.
yes, you should do that definitely. So I tell all my clients that you might have landed a lead on LinkedIn or any other social media platform, but what is more important is that you take a flight, land there, and just meet the people. I think if somebody meets on a face-to-face basis, it opens up a lot of doors.
Exactly, sir. Exactly. Though as you said, sir, I am making connections over LinkedIn, sending them messages. They are replying those things, but the conversions, it is out of say maybe one or two out of 20. So
Yeah.
this is the ratio I'm getting now.
True, true,
Until and unless visit there, I understood while talking to them, while speaking to them, those things, even be it startup, be it well established, the same problems are relationship.
true. That's right.
So time is less, sir. So I'm getting to the second question, sir. So,
Sure.
sir, what is the business entity setup available in the GCC region? Though you have told a bit of that in the first question, sir. So, if you can get into the details, sir, and also another query that is coming to my mind is a local partner necessary there? Is a local partner necessary to be there in the
Sure.
GCC region?
Sure. Okay. So each country in the GCC offers different type of business setups. And earlier there was a hard requirement of having a local partner, and this local partner was required to hold about 51% of the entity. So that was a requirement. But now it has been made easy for foreign investors to have full ownership in most of the sectors. Some of the sectors, maybe oil and gas or real estate, still require a local partner, but almost all that I can think of have been opened up. And I will give an example of UAE and Saudi, which are the two most popular business destinations in the GCC. Now, in the UAE, like I said, there is an option of two entities, which is the mainland entity and a free zone entity. Each come with its own advantages. Now, if somebody were to do business locally in the UAE market, then a mainland entity would be advisable to that person. But if somebody were to export services to other GCC countries as well, then a free zone entity is the right fit for that person. In Saudi as well, again, we have similar kind of concept. There is a concept of limited liability company (LLCs). So there again, 100% foreign holding is now allowed, and there are some tax breaks to LLCs depending on the nature of business.
Perfect.
Right, sir.
One question, Siddharth sir, I was just wanting to understand. So, say Sayan is already in dealing with Saudi clients.
Mhm,
Do
mhm.
you suggest Sayan to visit Saudi or any other GCC country per se? Like, what do you suggest? Is it better to start with Saudi only, visit there, start with that, or maybe take some other region to, for, specifically the services that he's taking?
Right, right. So, see, I think if you are getting leads from one country, let's say Saudi, I would say that you should channelize all your energy in Saudi, land first few good accounts in Saudi, and then use those accounts as credentials for other regions. So, say for example, if I have a strong Saudi client, it is going to be very easy for me to get an entry into a UAE market. And if vice versa, if I have a client in UAE, then it is going to be easy for me to get some good clients in Saudi as well. So I would say that rather than focusing on all the regions, if you're getting good leads in one country, then put all your energies on that.
Perfect. Sian, you may go ahead with the
Yeah,
other question.
definitely, sir. Definitely, because those are, as I said, I was mainly focusing on LinkedIn. I am going all out in all the GCC countries. Okay, but the response rate, which I said, even if it is 2 out of 20, mainly it is coming from Saudi.
Correct. Correct.
Mainly, I'm getting from there because my services, which I'm supplying to all the exporting to all the countries, are very common. It's nothing new.
Mhm.
It's very common and nothing new. So there are already to convert a client from there to take a export of that. My charges has to be much lesser than their market. That is
True.
the only way
True.
I can get it.
True.
As of now, this
Charges.
I have not.
Yeah. True. True. Charges have to be lesser. Quality has to be top notch. And see, out of 20, two might get converted. But when those two convert, I think you have enough business for the year. Those are going to be fairly large accounts then.
Fairly, sir. And to be, I last January only I've landed one. I don't want to share the figure, which Muskan knows, but it is a large account, and it is just a one way. It is just a one way, and as you said, they are more relationship driven. Entire GCC countries
True.
I'm talking about, not
Right.
about Saudi.
Right.
The first question that they ask me whether you have done any business in any of the GCC countries yet.
Yes.
Forget whether doing it in US, UK, anywhere. Have you done anything in GCC?
So that's the first question, and the second question that they would ask is, do you have a local presence?
Exactly, sir. Exactly. That is also a setback I get in, suppose that even if the relationship is well built, that is the one of the setback I am getting.
Hmm.
With you at least have a representative here who can come and see my, have a discussion face to face.
So, Sayan, what I usually advise my clients here is that naturally for somebody to just go and set up an entity in the GCC region is quite cost. It's steep cost for somebody to set up an entity there. So I ask them to find a local person who is in similar line of business, or maybe some relationship that you can have, and that person can act as your local face for the clients. And once you have, let's say, four, five, six big accounts, and you think that yes, now I can absorb that cost of setting up a presence in the GCC, that is when you should actually go ahead and set up an entity.
Absolutely, sir. Absolutely. Because, being a startup, it is very difficult to just why, even if I'm talking about GCC, not even if you set up anything outside GCC also, it it has a very huge cost. And for
True.
startup like that, this is very, very difficult as of
Very,
now.
very true.
So, sir, I'm focusing on the next question, sir. As you have just
Sure.
did cover to a certain about the tax policies, sir, across the various countries. There are six countries across GCC,
Right.
and what are the in case of tax policies? If I bifurcate, there are a lot of things.
Mhm.
There are a lot of things to be considered. But what are out of those things, sir? What are the important tax policies or the tax points that one should keep in mind?
So see, in terms of tax policies, what we can do is we can look at this from two angles. So the first angle is basically somebody who has set up an entity in the GCC region. Now there is going to be a requirement of VAT, corporate tax, customs, excise, all of that. But now, if a business not which is only operating from India does not have a local presence, what happens in that case? Then what is looked into is the nature of income that this business is generating. It can be either through services or goods. Whether this business has a permanent establishment. A permanent establishment is an international tax concept. This comes into picture when one business so business in one country is transacting with business in another country without having a local entity in that country. And the third consideration is what are the tax withholding obligations in the country from which we are generating this revenue from. Withholding tax is equivalent of the TDS that we have in India. So the clients there, while making the payment, are obligated to withhold taxes on the fees and then remit it back to the business in India. Now this requirement is not there in the UAE but is there in Saudi. So all of these tax regulations are also driven by double tax avoidance agreements that is signed by India and the country with which you are transacting. So I think, if I'm not wrong, India has a double tax avoidance treaty with all the six GCC countries, and most of these transactions are governed by those tax treaties. Also, what is important to be considered from a VAT perspective for Indian businesses is that either it can be a B2B or a B2C sort of a transaction, right? If it is a B2B transaction, then the onus of remitting VAT or discharging VAT is with the business in the GCC, the person who is availing these services, because they are importing services into the country. As far as we are concerned, from a GST perspective, we are exporting these services. So, like under GST in India, we have a concept of reverse charge mechanism. Similarly, even in the GCC countries, there is a concept of reverse charge mechanism. So this is in case of a B2B service. But let's say, for example, if somebody is doing a B2C sort of a service, then in that case, of course, there are certain thresholds beyond which, if the business crosses, then there is a requirement of registering for VAT in those countries.
Absolutely, sir. I was just, you got over that VAT. Otherwise, I was about to ask about that VAT. Though I am doing the service, is it necessary for me to do the VAT, all those? Because that was the concern for me. So, sir, now my another query that while discussing with you, it come to my mind. Now, set up now. Now, suppose, sir, in any of the GCC countries, if I want to set up my business,
Mhm.
uh, it will cover. Now suppose I am covering UAE. Say suppose I have a company in UAE, have an establishment there in the free zone which you have mentioned.
Mhm.
Will it cover all the GCC region taxation policies and all? Though I understand, sir, from your other perspective that it differs, but will there be any advantage that if I am landing in, suppose a deal, though I am based in UAE, but I am getting a deal in Saudi or maybe in Oman, will I get any tax benefit to that, or will I get any other benefit, whether it covers the entire six other five regions as well?
Understand. And this is a really good question. And in fact, most of our clients have asked us this question. And so basically, your question is that if I have presence, let's say in one country, can I cater to all the six GCC countries using that one presence?
Or I have to be present in all six countries?
Right.
That's the question.
Right. So here there is no straight answer, and this purely depends on the nature of business and the operating model that we choose to follow. Now, what you need to consider here is that one country can be enough, but again, depends on the business. Let's say you are in consulting, e-commerce, services, having a base in one country, let's say for example UAE or Saudi, would give you flexibility to serve clients across the region. But let's say you are in manufacturing, retail, or logistics, then having a legal presence would be required in multiple GCC countries, because then there are goods which are getting shipped and transferred, which would require customs and other regulatory clearances. So to answer your question, if it is a services oriented business, then maybe one country is sufficient. But if it is more on the goods related or manufacturing related, trading related business, then you would require maybe presence in more than one country.
Thank you, Siddharth sir. And Sayan, I would just request, we are running a little late. I
Yeah.
mean, we've already sort of, the deadline is done. Can we just take a last quick
Sure.
Sure.
question?
One last question. Yeah,
Yeah, yeah,
Yeah.
that's
please,
the last
please, Sayan,
question I
last
have.
question.
Sir, so it is, sir, what is the best way to manage multi-currency transaction and minimize the forex risk, sir, when
Okay.
dealing with any of the countries of GCC?
Okay. Okay. So see, most of the GCC countries have pegged their currencies to US dollar. I think except Kuwait, which has pegged its currency to a basket of currencies, but again predominantly driven by USD. So all of these countries have pegged their currencies to US dollar. So the simple answer is to invoice and receive payments in USD. And many GCC companies, especially in oil and gas trading and logistics, they prefer USD transactions.
Yeah. Thanks,
Perfect.
sir. Thanks for clarifying this, actually.
Thank you so much, Siddharth sir. Just last one question that I would like Sayan to answer. Sayan, if you could go back and do one thing differently, what would that be? Keeping in mind that their businesses similar to yours at your phase, one thing that you would suggest them or do differently, uh, if you could go back in time.
Uh, if there is any of time machine of that, if I get, the only thing, initially when I started, be it in a freelancing mode or in a, directly in the company's mode, entrepreneurship is only about learning. So even if you think or that I will be in an entrepreneurship after 10 days or after 10 years or even after 10 months, do all the learnings while you are there, not only in the specified field where you are working in a particular job, but try to learn all other aspects as a whole of a business, which I have just got focused on the marketing domain. Now I have to learn about the finance, operations, HR, everything. So if I have get the opportunity again to go back to my 10 years of experience, I would definitely love to learn apart from the marketing, all other aspects as well.
Wonderful, Sian. Thank you so much, Sian, for sharing your journey and challenges with us today. And I'm sure your insights will resonate with so many founders and will help them navigate their path. And thank you so much, Siddharth sir. You have genuinely shared so much of experiences and such great questions. I believe anybody at this moment in time can very well enter into GCC market with confidence with the questions that you've answered. And we've got,
Definitely.
I mean, I myself have got so much clarity with respect to that market. And genuinely, thank you so much for joining in and sharing your experiences and answering the questions. To everyone listening, if you have been inspired or found value in today's conversation, let us know. And if you're a founder with questions or challenges, we would love to have you join us on Beyond the Idea to tackle them together. Uh, Siddharth sir, if anything you would like to mention at the last to the people who are watching.
So, Muskan, I'm glad that I could help and I could answer most of the questions that Sayan had. And Sayan, all the best to you for exploring opportunities in the GCC region. And in case if anything comes across my way, I would be happy to bounce it off you. And in future, if you or any of the viewers have any questions on the region, I'll be glad to answer those questions.
Definitely, sir. Definitely. I
Wonderful.
think in the near future only we will have a discussion on this very
Sure.
soon. Yeah,
Look forward.
Wonderful. Thank
definitely.
you so much. Thank you
Thank you.
guys for tuning in. Until next time, keep pushing your ideas forward and remember, we are here to help you go beyond the idea. Thank you so much. Thank you, Siddharth sir. Thank you, Sayan. Thank you.
Thank
Thank
you.
you.
Thanks, Muskan. Thanks, sir. Thanks again. Yeah.
Thank you.